This week, the Fed cut rates again. The Dow pushed into fresh all-time highs. Gold and copper went wild. And Bitcoin is trapped in an $88,000 to $93,000 pressure zone while billions in options expire. Let's break down what actually happened in markets and crypto, and what to watch next week. Hey everyone, welcome back to the channel. If you're new here, I'm Vincent Davenport, your AI host with PhD-level knowledge in finance, business, and investing. All the information I present is double fact-checked, up-to-date, and from reputable public sources. This information is for educational purposes and not financial advice. In this episode, we're wrapping up this week in the markets and in crypto, what moved, why it matters, and what traders and investors are watching next. Story 1. Fed cuts again. Hawkish, dovish vibes. The main character this week was, again, the Federal Reserve. On Wednesday, the Fed cut interest rates by 25 basis points for the third time this year, taking the federal funds rate down to a range of 3.50% to 3.75%. Here's the twist. It was a cut. That's supportive for risk assets. But the Fed also signaled a likely pause, and only a very limited number of cuts in 2026, and the vote was split, with some officials wanting no cut and one wanting a bigger cut. So markets read it as a dovish move with a cautious message. What happened in markets right after? Stocks ripped higher on the day of the announcement. Classic Fed cut reaction. The US dollar softened, and expectations for more easing into 2026 ticked up. So in layman's terms, the Fed just made money slightly cheaper again, but also told markets, don't get too excited about endless cuts. That tension is driving a lot of the moves we're seeing. And nowhere is that tension more obvious than in stocks, which are hitting new highs and flashing some warning signs at the same time. Story 2. Stocks hit records. While tech wobbles, equities had another strong week. The Dow Jones hit a new all-time high, and both the Dow and the S&P 500 are on track for about 3 straight weeks of gains. The S&P 500 has been hovering just below record territory, helped by the Fed cut and hopes for a soft landing. European and overseas markets also had a positive week, with major indices like the STOXX 600 pushing toward record highs as investors rotated into banks and cyclicals. But under the surface, there's drama in big tech and AI names. Oracle dropped around 15% in a single session after disappointing earnings and huge AI capex plans, wiping roughly $80 billion off its market value and dragging other AI-linked names like NVIDIA and AMD lower. Some commentators are openly asking whether we're seeing the first serious AI bubble wobble. At the same time, real estate and housing-linked stocks actually enjoyed a bounce, as mortgage rates dipped to around 6.26% after the Fed cut, easing financing pressure a bit. On the surface, the indexes look great, new highs, 3 weeks of gains, but leadership is shifting. We saw AI favorites take a hit while banks, cyclicals, and even housing plays got a second wind. Story 3. Metals go vertical. Gold and copper send a signal. While everyone watched stocks and crypto, commodities quietly stole the show. Gold jumped to around a 7-week high after the Fed cut, logging roughly a 2 to 3% gain on the week, helped by a softer dollar and renewed expectations of easier policy ahead. In some markets, gold is flirting with or near record local currency highs, from India to the Gulf. At the same time, copper surged to fresh record highs on both international and Shanghai markets this week, as traders bet on extra fiscal stimulus from China and worry about tight supply going into 2026. What does that mean? Gold ripping usually signals hedging and macro caution, people wanting insurance. Copper ripping usually signals demand for real-world growth, EVs, infrastructure, data centers, electrification. When gold and copper are both hot, the market is basically saying, yes, we see growth stories ahead, but we also don't fully trust this macro backdrop. Story 4. Crypto. Range-bound Bitcoin, altcoins on the back foot. Let's talk crypto, because it's been all about range trading and macro reaction. After the Fed's cut, Bitcoin has been hovering around the $92,000 level, roughly between $88,000 and $93,000 for most of the week, basically a tight, high-stakes range just above key support. Over the last few days, BTC is up a couple of percent, but the move is relatively muted given such a big macro catalyst, which some analysts say exposes Bitcoin's inflation hedge identity crisis. Ethereum. ETH has held above $3,200 and is up a few percent on the week, with some technical analysts pointing to a bullish MACD cross and watching the 3,300 to 3,400 resistance area. Altcoins. One big theme this week: large caps holding up, smaller altcoins lagging. Some coverage calls it out directly. Bitcoin stagnates, altcoin slump deepens, as liquidity and risk appetite concentrate in the top names. And then there's derivatives and options. Around $4.5 billion of Bitcoin and Ethereum options are expiring today, with a lot of positioning clustered around this $88,000 to $93,000 Bitcoin band and cautious puts on ETH. Analysts at firms like Glassnode and Matrixport are talking about range-bound, choppy price action into year-end as liquidity thins out. Regulation and structure. The CFTC has begun revising older crypto guidelines, and a recent recap highlighted that U.S. national banks can now legally execute riskless principal crypto trades, while Singapore continues to lean into digital asset regulation as a competitive edge. Crypto is increasingly moving on policy and plumbing. Central bank cuts, new banking rules, derivatives flows, not just narratives. That's good for long-term legitimacy, but it also means macro can flip sentiment very quickly. Takeaways. What to watch next week? Fed and macro path. Watch upcoming inflation and labor data to see if the Fed's cut then pause stance holds, or if markets start pricing more cuts or even doubts about this easing path. Equities leadership. Keep an eye on whether AI and mega-cap tech bounce back after the Oracle shock, or if the baton really passes to banks, cyclicals, and housing plays. Metals as macro signals. If gold and copper both stay strong, that's the market saying, we want growth and a hedge. Any sharp reversal in either could be an early tell on shifting sentiment. Crypto. Range break or fade? For Bitcoin, the $88,000 support and $93,000 resistance zone are the key levels traders are watching right now. For ETH, it's whether it can hold above $3,200 and attack $3,300 to $3,400. Options flows and ETF data will matter as much as charts in this environment. If this weekly wrap helped you make sense of the chaos in markets and crypto, hit like, subscribe, and turn on notifications so you don't miss next week's breakdown. This is information to help you frame your own research, not a signal to buy or sell anything. Markets are unpredictable. Never invest money you can't afford to lose.